you assume that down the road over the next few years, gold can go up maybe to $8,000. And you recall that the last bull market in the 1970s ended with a gold-silver ratio at 15. This index topped out in 2008 with the financial crisis, and it never recovered. 16-year bear market, brutal bear market, beaten down completely. We had one recovery when gold made its new all-time high back in 2011, but this also is like far away from where it's trading right now.
Special coverage of the Deutsche Goldmesse is brought to you by First Majestic Silver Corp, listed on the NYSE and the TSX under the ticker AG. There's no substitute for silver. Hello and welcome back to Soar Financially, here from the floor of the Deutsche Goldmesse, the German gold show in Frankfurt, Germany. My name is Kai Hoffmann, I'm the @JR Mining guy over on X, and of course, your host of this channel. And I'm looking forward to bringing back Florian Grummes. He's the author, founder, and brain behind the Midas touch. Florian, thanks so much for coming to Frankfurt.
Thank you. It's a pleasure to be back here.
Really looking forward to hosting you. You just gave a phenomenal keynote at the conference as well. And we'll go through some of the topics you've discussed, of course.
Sure.
One big topic is gold being monetized or re-monetized.
Re-monetized.
It's
exactly.
a big word, re-monetizing. What does it mean? What's happening?
Well, I mean, look, since the end of the gold window, so to speak, that Nixon closed in 1971, gold slowly but surely has been moved out of the system. It didn't have any real importance anymore. I mean, of course, in the background, yes, but I mean, you see it in most of the portfolios. Usually, people don't have more than 1 or 2% of gold, if at all, right? This used to be totally different in the 1970s, and it didn't play a big role on the geopolitical table in the last 10, 20, 30 years, at least I would say. But now, thanks to China, the physical gold exchange in Shanghai, and the fact that the Chinese have chosen gold and not Bitcoin to basically inject trust and confidence into their currency, renminbi, gold is back on basically the stage. And you see that the Americans also trying to get as much gold as they can back into the country. You see that lots of other countries are repatriating their gold, physical gold holdings, and I think that this will continue this trend. We had the news very recently that China is now planning to open warehouses all over the world to basically give their trading partners the opportunity to exchange the renminbis directly into gold in their own country, meaning in Saudi, in Africa, etc. And they need a lot of gold for that.
What's the advantage of doing that, Florian?
If you are Saudi Arabia and you sell oil to China and then they give you renminbi and you can basically exchange that renminbi in China and then you have the physical gold in China, I think that's not really convenient, right? So it's much easier for you if you have the gold in your own country and you go to your trading partner's warehouse and say, look, here's the paper money or whatever, the digital money, give me the gold. And that's happening, and that's what the Chinese need to do. And if you go back in the very big scheme of things, like over the last 500-600 years, if you look back, the Spanish, the Portuguese, the Dutch, the French, the English, it was always about who has the most gold and who was able to back their currency by gold to take over world power, right? I mean, that's basically the story behind everything. And that's what's happening.
You said they're using gold to inject trust back into their currency. What do you mean by that, and how are they doing that?
Would you hold renminbi?
But it's not officially gold-backed.
No. But
that's what I mean. So
yeah, exactly. But if you are able to exchange it into a physical gold easily in your own country, that's a very interesting part. And of course, over probably the next few decades, they will come up with more solutions to make it easier and maybe in some form back the yuan with gold, or at least make it easier to convert it directly into a gold. We'll have to see. I mean, I know that there's lots of projects already happening, and they also, I think, will come up with some digital form of one with some direct exchange into gold option. So this is all happening already, and it's happening fast. So.
No, interesting. Like, because Bitcoin is banned in China. It's been banned for a number of years now. Did they lack foresight, or is it really already a strategic decision 2 years ago? It's like, no, we're going the gold route, not the Bitcoin route.
I mean, it's banned for the people in China, so that's another story or reasons to this big gold rally that we've seen, that as a Chinese citizen, you were not able to buy Bitcoin, and you've witnessed the stock market crash a few years ago. You witnessed the real estate disaster in China. So what is left, right? That's why people went into gold, obviously, the last few years. And I mean, I remember the Chinese government actually promoting gold for the last 20 years to its citizens. And like culturally speaking, it's also a long history in China of gold. So a few centuries, I mean, the last 1,500 years actually. So the thing is that the Chinese are the largest gold producer already. We know that not many ounces of gold and silver have left the country over the last few years. They've been working on this on a long, big plan. As you know, the Chinese planning probably 10, 20, 30, 40 years ahead or in advance. While in the West, it's like every 3-4 years, new people...
Quarterly. We think quarterly.
Yeah, exactly. So that's obviously the strategy from China for a long time already. And I think they don't mind if their people own lots of gold and silver. And they made the strategical decision, obviously, quite a while ago, not to use Bitcoin. Obviously also because it's much easier to move your money out of the country if you hold Bitcoin. It's a little bit more difficult with gold.
Maybe trying to connect the two topics we just discussed. So if you can exchange your renminbi for gold outside of China, that means they have to move gold outside of China, which they haven't done in forever, if you're following my logic here, right? So are they starting to export now? Because they don't, as far as I know, they don't have any free trade zones within Saudi Arabia that's actually Chinese ground where they have their warehouses. Or do you see that happening?
I think that's all coming.
Okay.
I think that's all coming, and I think they're all trying to also buy as much gold as they can outside of China. I mean, in the whole Middle East, there is obviously, I mean, most of the gold from Africa is going through Dubai nowadays. It's a big refinery hub, and you can be very sure that they're trying to get their hands on some of this gold and ship it to their warehouses and trading points for their trading partners. So this is happening as we speak, and this is obviously taking time to roll out in detail, but it's happening. Yeah.
Let's talk about the gold price action of the last 3 months. It's been absolutely cataclysmic. You used the word blow off top, which is a bit negative because it means there's an end to it. Right? That we've seen the blow off top. It's like, okay, crap. Okay, where are we going from here? Right. Can you explain the gold move recently?
Sure. Look, I mean, the rally started with this triple low at 1615 in autumn of 2022. So here we are 2.5 years later. Gold went up 117% in 2.5 years. Massive move. And it accelerated, obviously, over the last few weeks and months. I mean, it went kind of like vertical. We've seen, especially in the Chinese, in the Asian trading sessions, gap ups, steep moves higher. Of course, at some point, it was a bit too much in too short of a time. And I think it's a healthy pullback that we're now seeing. So far, it's been a volatile consolidation on high levels, and that's what I was expecting, and that's what I think primarily will continue. So I'm actually not too worried that gold will make a deep pullback and deep correction here. Only in the event, and that's what I mentioned today as well, only in the event of a real new financial crisis like 2008. Because then suddenly liquidity disappears and then everything goes down and then gold will also come down. But I don't even see a financial crisis around the corner because I believe that governments and central banks are flooding the market again with liquidity already. They will increase it, and if there should be any severe pressure or problems in the markets, they will come around and immediately print more money. So because the system is so unstable already, they cannot actually risk that it breaks down totally. So I made the case that gold most likely will probably hold above $3,000 already. Maybe we've seen already the low on Thursday at 3,120. I explained a little bit more in depth why I think it will take some time. It could take a few weeks, sideways, volatile, tricky price action. That's also a way to wear out traders and investors, like just going nowhere for a while. And people are getting frustrated because they don't understand what's happening and they're just confused. And then suddenly, once things have calmed down a little bit, the next move starts. So I don't think that there's a huge downside. Worst case, probably slightly below 3,000, maybe 2,800, 2,950, but that's already rather deep, I would say.
But there's support there. Like if you look at I'm not a technical analyst, but if you just put the basic line on the chart, like 2850 is roughly a support line, if I'm not mistaken. Do you see that? It feels like there's a bit of a gap that needs to be closed anyway, because as you said, we shot up quite fast.
No, I don't think there's a gap. It looks like there is a triangle. There's a triangle developing that looks like we won't see much lower prices than what we've seen on Thursday, 3,120. And the beauty is there is 2 open gaps on the upside, actually. And gaps have the tendency to get filled. And actually, in 80% of the time, gaps are getting filled. So there is actually a trajectory for gold towards the upside still already. And the higher gap is at 3,430-ish, and the lower one is at 3,290 to 3,330. So that's already 2 kind of like little magnets pulling the price probably back up over the next few weeks. So I would not be surprised if we see these gaps getting closed until the summer. But what I basically expect is volatile up and down in a trading range between, let's say, roughly speaking, 3,400 and 3,100. And like weird moves like what we've seen last week, like going down to $100, then recovering $130 in a day, next day $90 down, and then people are like, what's going on here? I have no clue.
Like volatility is crazy. Like just on, it might have been Friday or Thursday actually, we had a $120 move.
Yeah, exactly. So Thursday, big recovery.
That was
right?
Thursday, yeah, exactly.
And then on 9 day, on the next day, $90 down again.
Yeah.
That's already, if this continues for a few weeks, people are completely confused and giving up, and they don't even want to look at it anymore.
Yeah.
So, and it takes out all the leverage guys, this kind of price action as well. So it doesn't have to be always a deep, nasty pullback correction. It can also happen over time and just be volatile, and going sideways.
What you just said brought a quote from Anchorman to my head. It's like 80% of the time works all the time. I love that quote. It's actually 60% of the time it works all the time is the quote from Anchorman. But when he said that, I was like, yeah, I like that. We got to talk silver.
Yes.
Gold-silver ratio at 100 still. What is that telling?
So I wanted to mention it already here in our little gold discussion. Another argument why we should assume that this recent gold top at 3,500 is not too important, because silver has not shown up. So any time there was a significant, important, at least multi-month top in gold, silver had shown up, at least for a few days doing its own thing, or a few weeks, or in the case of 2011 top, it went up 8 months in a row and like did its own thing, and basically gold followed silver back then. We haven't seen any of that. So that tells me that silver is still to come. Yes, you're right, it's lagging. Yes, gold-silver ratio at 98 is crazy. Totally undervalued in my opinion. I'm buying physical silver. I'm not buying gold at these prices. You talk with the mining guys as well. You know that, some of them mine 7 ounces of silver for 1 ounce of gold. Market is trading at 98. That's crazy. I think it's a huge opportunity. I have no explanation in terms of like technological advances or progress that it's so much easier to mine silver than gold nowadays. So that's all not happening. It's just that the market is out of balance for whatever reason. And I think it will change, and what it takes for silver is to break above 34, 35. This is like the line in the sand. This massive resistance zone, obviously. But
we've seen it hit twice already.
Right? Exactly. So I think if this happens, and I'm very sure it will happen, rather sooner than later, then you're going to have a quick move towards 50. And remember, over the last 50 years, silver has not been trading very often above 30. Now it seems like really trading in that zone between 30 and 50. I had a chart today showing these different zones where silver has been trading over the last 50 years. We have a huge cup and handle pattern in silver as well, the mother of all cup and handles, I call it, because it goes back 50 years. I showed today all the energy that has been unleashed once gold broke out of this cup and handle of the last 13 years. So if silver breaks out of its cup and handle of the last 50 years, it's going to be even more crazy. And I'm pretty sure we're going to see $50 this year. And then we have to see, once silver breaks above $50, which is obviously the high from 1980 and 2011, then On a linear chart, you have a $100 price target for silver, and on a logarithmic chart, I have a $500 price target for silver. And if you assume that down the road, over the next few years, gold can go up maybe to $8,000, and you recall that the last bull market in the 1970s ended with a gold-silver ratio at 15, the case for $500 silver is on the table, I would say.
It's justifiable, absolutely.
So I'm not worried that silver is lagging. I remember in the bull market 2001 to 2011, we had the same situations quite a few times. I remember people complaining, worrying that silver is not there, it's not happening, it's not really a bull market, everything's wrong. That's not true. So I think silver will come, it will catch up violently. It's very hard to time it. It's a small market, it loves to deceive everyone. But it will happen. So I'm very bullish on the physical silver investments, and I think also silver mining stocks are looking very interesting now.
Let me ask a technical follow-up question. Gold, it took 4 tries to break out of 2080.
Yeah.
That price level. It was four times. Now you're talking about a triple top in silver and the breakout to follow there. Why is it different? Why do you think it will be different?
You mean in terms of...
just trading breakouts? So like gold took 4 tries to get out of the trading range, like up until 2080, and then it broke out, and then it broke out violently.
Right.
So with the 34, 35 price level, we've hit it twice now. You're expecting a breakout after the 3rd try. Is that correct?
Yeah, probably after the 3rd or 4th trial.
Yeah.
I think that silver will break through this 34, 35 resistance zone. But the comparison that you reference it to with gold is the $50 level for silver. So that's the big cup and handle. That's the neckline of this cup and handle. And I think silver might need a little bit more time to break through.
Fair enough. Thanks for clarifying.
But who knows? I mean, it can also be that once it finally gets back to 50, everybody expects a pullback, and then it does exactly the opposite, right? So, I mean, the market always does everything to loom everyone in the wrong direction, right? Yeah. So that's always the case. But right now, I'm focused on silver, $50 over the, let's say, next few weeks up to the next 6 to 8 months.
Fantastic. We got to talk to mining stocks as well. We're at the DEUTSCHE GOLDMESSE. We've got 23 companies presenting as well. What do you make of the miners right now?
I showed today a chart of the TSX Venture index. And I have not very much looked at this index in a long time, to be very honest, because it's been just a nightmarish, kind of like disastrous chart. So I've been very active in the bull market 2001 to 2011, and I remember how wonderful it was being invested in Canadian mining stock back then. But this index topped out in 2008 with the financial crisis, and it never recovered. It's basically been since 2008 in a, 16-year bear market. Brutal bear market, beaten down completely. We had one recovery when gold made its new all-time high back in 2011, but this also is like far away from where it's trading right now. So I really liked going through these charts of the TSX Venture today, because to me it seems like it finally starts to wake up. It's been dormant for the last 5, 6, if not 8 years. It's been a big bottom kind of phase. It's been a brutal stretch, a torture for most investors who've been staying in for the long time. But I see now evidence that there is more and more momentum coming in. We have an uptrend. We have buy signals on various time frames. And I think this index is ready to catch up. And if you just take the last few weeks, since this crash in late March, early April, when everything went down, stock market went down heavily, Bitcoin went down, everybody was panicking, silver went down, even gold had 3 bad days back then. And if you look now, the price action since then, it's like, wow, this TSX Venture index is up dramatically, it's making new highs, has recovered not only the pullback, that sharp in a V-shape kind of like recovery, but is running higher strongly, buy signals on all time frames now. So I'm very optimistic actually that this terrible period in the mining stocks is coming to an end, and I think we're going to see a pretty good second part of the year actually.
I love your optimism. Like, I was a little more pessimistic personally, because we're still waiting for the next Fed cut. So last September, Beaver Creek, you were at the conference as well. I believe we saw each other there.
Yep.
the Fed cut, and all of a sudden there was euphoria, like after the conference. But it was just mid-September. The Fed cut, and all of a sudden there was euphoria on the market. That euphoria has disappeared. It doesn't exist anymore. The Fed has been holding steady since, and volumes dried up again. Right? Euphoria has disappeared. And now I'm waiting till September. Everybody expects September is going to be the next time the Fed cuts. So I hope they cut sooner, just from a very selfish perspective here. How do you rate those, like, let's call them macro shocks here from the Fed, positive or negative, and the impact?
I mean, I'm following this as well, of course, but I don't give it too much of an importance. I just look at the charts and want to see the momentum. And then for whatever reason there is the momentum. It can be lots of things. And I mean, it's not a secret that gold has been running higher dramatically and that miners have been lagging dramatically. And it's also not a secret that many of the big senior gold producers printing cash like never before. And it's also not a secret that they all are basically need to replenish their reserves and resources. And it's probably time for them to do some more. In terms of M&A activity, I think this is coming. This is going to be the big trigger for the whole sector, and the smart money is anticipating it now. And Fed cuts rate, yes, maybe not. Who knows? I don't know. I mean, this is, of course, in the short term, always it looks like it's dramatically influencing the market. But again, I think the information that I get from the charts from the TSX Venture looks very promising, totally independent of all this Fed talk. But of course, we know that liquidity is rising already in the system dramatically. I mean, if you look at the M2 liquidity measurements, it's all projecting to higher prices for everything. So my crack up boom theory still works out beautifully. It basically pushes everything that is more or less valuable higher. So I'm very optimistic for the mining stocks now.
No,
I've been hesitating, I have to tell you. I mean, you know that I'm in the sector for many years. I've been, of course, we never always get the timing right, but I think it's now really getting interesting.
It's like whack-a-mole. Whenever you stick your head out, you get whacked on the head. That's exactly what it is, and that's why it's like all the mining investors, we're all nervous. Like we're all scared that this is actually the breakout. We're all missing it. Right?
Yeah, that's actually the issue now.
Because we've been hit so many times or punched in the face, quite honestly.
Right.
So, Florian, what do you make of seasonality? It's May, you know the saying, go, sell in May, go away, come back in September for a time to remember, whatever that saying is, right? But you know what I mean. Like
I had a seasonal chart today, and I mean it looks like it follows the pattern pretty precise this year. Usually you'll get a top in gold between March and May. Ideally, or the highest probability is in April, and exactly 22nd of April this year we've got this top. And usually now it should be followed by consolidation, correction, pullback, whatever, into June, July. And then we get the summer rally, and that usually lasts 1 or 2 months. And that should probably at least lead to a closing of those two open gaps. So I'm optimistic that we have to wait maybe a few more weeks, maybe a month, 4 or 5 weeks, I think. And then gold might be ready for a nice summer rally. So that's what I'm focused on right now, because I'm mainly trading the gold market. So that's where I make part of my living, actually. So I'm very excited about that opportunity.
Fantastic. I'll be on vacation when the gold rebounds here. Absolutely. Florian, maybe last question. You gave the keynote. If there was one message that you wanted the investors to take away from your talk, what would it have been?
That's a good question, actually. Hopefully there were a lot of good messages, but
like that one key takeaway.
The one key takeaway that I see so often people struggling with, especially when it comes to the plain, simple investment into physical gold and silver. They all try to time the market. They all try to put a big amount of money in once on the table. And I think you have to make it easier and do a scale-in tactic as well as a scaling-out tactic, meaning you buy in various steps and not try to optimize the perfect entry, and then you wait a year and then the train has left and you're running behind the train and you never get this good price that you initially could have had because you were trying to optimize, trying to buy lower. It never happened, or you listened to the wrong people. So if you consider investing in physical precious metals, or if you consider in mining stocks, you don't have to put the whole amount immediately on the table. Take 1/4, 1/5, or even 1/10, and just start. I think that's often a very important information. It seems so simple, but people often don't think about it. So I think that's very helpful information.
Dollar cost average.
After that, yes. But you need to take this initial step, because once you are invested, suddenly you magically find more time to be focused on it. You suddenly start following your investment closer. You're looking at the price section, you're looking at the news flow, and then it's much easier. Otherwise, often people have this idea, I want to invest, and maybe it has to come lower. This guy told me maybe. And then out of sight, half a year later, I missed this opportunity. Or you've been just waiting, and then the train has left and you're running behind it. So, get your hands wet with a small position, and then you still can increase in dollar cost average, as I said.
Yeah. Well, it was an interesting stat I heard this week was I think the average time people do due diligence before they buy their first mining stock is 6 minutes.
Okay.
So I think we need to up that number a little bit as well. So.
Yeah. I mean, due diligence is obviously necessary, and a conference like yours is wonderful to meet the management, to really get an understanding of the people behind the project, to really get a feeling. I mean, that's the most important part of everything, right? Like the management. What have they done in the past? How's the track record? What kind of like impression and feeling do you get from them? Are those the people that can make it, or they are just burning through your money?
Exactly. Right? Or they're just here for the good food.
Right.
Exactly. Florian, thank you so much for joining us. Where can we send our audience?
MidasTouch-consulting.com. We have a Telegram channel. We have a Substack. We have a free newsletter. Website, Telegram, Substack. That's it.
Fantastic. Florian, really appreciate your time. Thanks so much for coming out. Much appreciated. Everybody else, thank you so much for tuning in here to Soar Financially from the floor of the Deutsche GOLDMESSE. Your support is much appreciated. It is free too, because you just need to hit that like and subscribe button, and we tremendously appreciate it. So we'll be back with lots more from Frankfurt, and stay safe out there.